So this past week in the Vortex, we had a lot of different events. As you can see here on the calendar, every day we have co-working options at 12 Eastern Standard Time. And then on Wednesday, we had two really interesting discussions, one of which was strategic design, where we talked about the benefits of using design to 2x, 3x, 10x your business's revenue. And then at 8 p.m., we also had a talk about pitch decks by Aaron Chavez from Argent Strategies. And I just wanted to share this with you guys because it's one of the most informative talks that I've listened to. And I think that if you have a business or if you know someone who has a business, you should send this to them. It's a very beneficial talk if you're trying to grow an idea and turn it into a business. Also, a ton of information in here that you can take and apply to structuring your pitch deck or even just the way you think about your idea and whether or not it's going to be valuable. So if you're interested in participating in this community of founders, go to paradigm.cx/thevortex. And other than that, we'll get right into it.
Some of them might have better use cases in different scenarios than you get, niche products, but you want to directly connect the solution to the problem in a very, very kind of direct and meaningful way. You'd be surprised how many pitch deck conversations end with, so can you just tell me really quick, your product does this? And there's a question mark. And that's a big problem if you've been talking for 20 minutes and there's still a question mark, right? Sizing the market, of course, you want to make sure you're accurate because everybody has a $1 billion market. And you have to imagine if you're talking to an angel investor who's putting in, 20K, 30K, 50K, whatever it is, they have an appreciation maybe for some of big numbers, right? They can look at it and go, okay, that looks like a pretty big market. You talk to a VC that invests a $100 million fund, they're bored by billions, right? Because they need a certain level of scale in order to get any level of return that excites them, right? So understanding what your market really looks like and understanding what's achievable, what's realistic, and what you can actually aim to show, because the perfect people, they don't set crazy expectations and then almost perform them. They set expectations and then they exceed. And then when you exceed value is when you get to start asking for more money for less or more help for less, or you start gaining some serious customer acquisition, which is always, of course, the end goal, to bring that value directly to people. You go from there to your business model breakdown. Of course, how do you make money? Summary of traction, which is it's important to show whether you can afford it, meaning, you can put some money towards it, or whether you just have to put in some sweat equity towards it. How are you going to get traction? How are you going to show that people want your product? Of course, it's great to be able to say that everybody wants a solution to waiting at the doctor's office way too long for an appointment. But go get 1,000 signatures that say that and agreements from a bunch of clinics that say they want to try the product. You can see that, of course, one problem everybody can relate to because nobody likes waiting at the doctor's office, but the other has way more punch, way more bites, way more quantitative than an investor. They can't argue with it. They can argue that the number's not big enough. They can argue that you should talk to, more people or more in depth, but they can't say that you haven't done something. And then from there, you get to have a better conversation. Going from there, you have your competition, your competitive advantages, which is basically who are we competing against and what's our hack to beating them, right? What's our hack to being relevant, to outperforming, to out-engineering them, and getting it done. Go to market, how are you actually going to get this thing out there? What is your plan for acquiring customers and having name brand recognition and being out in the world? Your team composition, which is if you're building a tech platform that deals with healthcare and athletes, if you don't have a technologist and somebody that likes to, work out and a business person or a finance person on there, you're going to be in a rough spot, right? Because investors want to feel like the big buckets for all the areas that you need in order to actually receive the capital, use the capital, track the capital that actually allows for the business to grow are covered, right? And that's your big stuff, the CEO, CFO, your general counselor, legal officer, whatever it might be, and the list continues. Your summary of timeline and milestones, which is very much what have you done to date and where are you going tomorrow? Because of course it's important to show that you've gotten some stuff done, but it's also equally important to show that you have a path forward. Your capital ask, it's important to be specific. How much do you want? And have you done the numbers and ran the math to actually figure out what you really need? Because of course, the more you ask for and the earlier you ask for it, the more expensive it is. And I don't want you to have to give away any more of your company than you need to, because that doesn't incentivize you now or in the future. And then last but not least, the financial projection overview, which we look towards 3 years because 5 years tends to be a little bit blurry. I mean, let's be honest, 6 months down the road with COVID going on, nobody knows what the world's going to be like. So a year projection is a bit bold, but 3 is very much the standard. So it's a good place to kind of think in. It's a good place to work in because you can set contracts for 12 months. You can set contracts for 18 months. People can see 3 years. You can't really see 10 years. You know what I mean? It's just much harder. So if anybody just needed to get bare bones information, there you have it. That if you can answer those big questions, for on every single one of those pages, you're going to be, light years ahead of many of the people that I've mentored and worked with who just need help and need to get off the ground. Now let's dig in. So the one-liner summarizing the business. Now, the way I've built this presentation, and feel free if anybody's interested, you can message me on Discord or reach out to me on LinkedIn, however it works. And I'm happy to send around this presentation. I don't like to blast it everywhere because then it just blows up people's inboxes and that's rude. So feel free to reach out if anybody wants it. But the goal is, this is basically something that if you printed this out and got a Sharpie, if you at every line, every box went, I get this, I understand, I know the application to my startup, you will be 80% of the way there in terms of knowing what you need to do at a base level to make progress. You won't be, wandering around in the dark if you can do that. So, of course, everybody I think has seen or heard of or watched some random 14-minute YouTube video summarizing the business model canvas. And what I want to focus on is, of course, the middle column, which is the value prop. This is the what value to whom for what. I'm going to give you the ability to transact faster for banks in order to save you time and money for your clients. Very clear, very punchy, only needs 10 to 15 words, right? Now, of course, your startups, they have complexity, they have focuses, they have niche groups. The important thing to think about is, how can I say something that is factually true, but isn't so overly specific that it needs 1,000 words? Because remember, something is interesting in the beginning with few words. I'll give you an example. Changing the financial future of Hispanics everywhere. That's an interesting bite, right? That's, okay, what does that look like? That's a platform that we know well because it's one of our clients and someone that we're working with. That's one of their one-liners. So you can see there as an example, right? You kind of have a core of what it is, and you can use something like the business model canvas to actually focus in and deal with the value proposition as to who am I, what am I providing, and what's the value and, the use case of it. Starting there and kind of having that as your foundation means you don't have to ask questions later, meaning, what's my go-to-market strategy? Well, go to the one-liner. Who am I targeting first? If it's not written there, then it probably should be written there. And now I just have to figure out what's the best path to get in front of those people and what kind of sub-niches exist within. The overview of the problem. So a problem is a problem, but not all problems are big problems. And so the way to think about it, and these are famous questions that are asked by a lot of accelerators. I think Y Combinator asks a lot of these. But one of the big ones is making sure that you validated that your problem is big enough for an investor to care, because part of the thing is you have to realize just because something is logical doesn't mean that it's viable from a market standpoint. Example, see-through toaster, right? Sounds great, sounds cool, something like you'd see on Ad Seed on TV. None of us have one of those, right? So clearly the demand isn't ridiculous, even though the product itself and the idea makes total sense. So you can see where logically, you could look at the equation and go, wait, this math makes sense, but there's no output. And it's because you didn't analyze the kind of the full scope of it. So is it popular? Is it frequent? Meaning, is everybody struggling with slow phone signal? Is everybody 10 seconds delayed? If everybody suffers a minor inconvenience, that is a major inconvenience. How is the industry growth? This is one of the weakest, but it's still important. For example, if you're a healthcare business today, you get brownie points because, of course, you're a healthcare business in the land of COVID, but you're also a healthcare business in the land of COVID. There's a lot of you. So it's good to know if you're on wave. It's good to know if you're involved. It's good to know if you're riding the trend and what the metrics around there are that support a growing industry, an industry that has depth and, years ahead of it of investment where you can actually make a meaningful difference and grow revenue. But you also want to make sure that this isn't where you should hang your hat. This is the beginning of understanding the maturity and kind of landscape that you're operating in. How costly is it? Things can be expensive, and it's one of those things as an easy example, weight loss. It's great to have a goal, but it's also great to have something to run away from, right? Nobody wants to feel embarrassed and see a double chin in the mirror, and everybody wants to look good on the beach, right? So in the same way, businesses function the same way. I'll give you an example. One of the clients that we work with, they're a compliance business. And part of the compliance is managing operations. Well, you can imagine when they went to sell, They first started by saying, look at how great our tech is for operations. Look at how much easier it makes the life. Well, making life easy and making things, slightly more convenient, that's not really a, gun to my head, I must have it. I can't live without it. And then they started saying, yeah, and I don't know if you guys know, but the fees for actually missing compliance actually add up to the tens of thousands. And if you're found that you didn't do anything to actually prevent it, there could be criminal charges and the organization could get shut down. Now you can imagine that went from, oh, this looks kind of nice to, oh my God, I don't care how much this costs. I need this so that I don't put my people, myself, my life, my financials at risk. So that business is able to offer a good thing and help their client run away from a bad thing. That's good. And then of course, is it mandatory? Another kind of using the same example just for the sake of ease. If the client that I'm referring to, they track behavioral health clinics. So people that have, substance abuse, they might be addicted to alcohol or whatever it might be. If all of a sudden tomorrow somebody comes out and say, you legally have to track everything via a system, a compliance system, they now have guaranteed demand. And now they obviously have guaranteed competition because more people are going to lean into it. But now they're a player in the world that has a fixed demand that, is being pushed to them, which is a great place to be. And it's not to say you have to have all of these. It's not to say you even have to have specifically any of these in particular, but these are points you should consider. These are fair questions that an investor may ask. These are ways of framing the problem other than just saying, oh, I hate it when my shoes come untied, right? It's like, well, if everybody in the world was able to tie their shoes 2 seconds faster, what does that mean for the world? What's the result? What's the value? What's the scale, if that makes sense? The solution to the problem, okay? So when I think of the solution, obviously there's a million ways to skin a cat, right? So when I look at it, I just try to ask myself some basic questions and see how comfortable I feel with the answer. Meaning, A, does it directly solve the problem? And it sounds very vanilla, but the answer needs to be real, right? It's about putting yourself in alignment. It's about not saying, starting with one idea, talking about 5 different services, and then ending with a vague note, right? Which can happen with a lot of founders, not because you're not focused on your solution, but because you're excited and you have 100 ideas and there's a bunch of things you want to do, and that's all fair and reasonable. But starting with a singular linear path, or a path that, at least if it's long, that's fine, but one that gives direction where an investor can see the story, where they can watch the narrative and see, oh, I get this, I understand, I can get that bite into it, right? That's what you're looking for. Is it the easiest and most rewarding way to solve a problem? So this is a classic example of, just because somebody signs up for your system doesn't mean they're going to use your system. So if your system is good but nobody uses it, then that's a problem, because that just means that the employer is going to go, well, I need the system, but you're not the right person to deliver it. Who else is out there? Maybe somebody else can make it easier for my employees. Maybe your thing's not that good, when in reality it could just be that the way you onboarded, or the mechanism, whether it's a click or a swipe or a button. I'll give you an example. If Facebook or Google, every time you searched, charged you 2 cents, that would feel weird. That would be the wrong business model. And those sites, but from a fundamental basis, you can imagine everybody in the land of TikTok today, there would be an outcry and it would be game over, right? At least for a few weeks in the stock market. But if Facebook and Google instead collect data and monetize it on the background, well, we didn't see it and we're not happy about it, but we allow them to do it because it's the easiest and most rewarding way for us to use their system and for them to monetize. They made it the path of least resistance, which is oh so critical. How are they solving the problem right now? I'll give you an easy example. A buddy of mine, his grandparent, invented basically a little motor. So you can imagine like a vent in your home that directs airflow. Well, imagine if you could motorize one and turn it on and off, right? That's a great little invention because it obviously turns things on and off, and he got a patent and life's good. The way he came up with it is because he was at a nurse's station and he was at the doctor's office and he saw that at the bottom, they were obviously freezing because doctor's offices are kept cold. And he noticed that there was a vent at the bottom that they had shoved a bunch of paper into, which was like, So they wanted to stop airflow, but they didn't have a way of doing it without paper. Well, what if I just, 3D print it up? What if I just metal it up and then actually make it, with a hinge and all the relevant design pieces to actually allow for something that's more mechanical and a little bit stronger? And all of a sudden, there was their demand. That is the perfect kind of example of leaning into a solution, of listening to the customer. They didn't have to say a word. All he had to do was see the action. And you might have to ask questions to get there. You might have to observe somebody using your system. You might even just have to think about it and, record yourself doing whatever the activity it is that your solution solves, and then see what you notice that you're saying and that you're not saying. Last but not least, how financially viable. Doesn't make sense. If your margin is 0.5% and you're not selling millions and millions of the X thing, X widget, you're going to be in a hard spot, right? Because they need to get an investment. The way to think about it, the very easy math, a venture capital firm, and right, this is different with angels, but a venture capital firm makes 10 investments, right? They expect 3 or 4 of them to go straight to zero. They might limp along for a while, but they know that the market is brutal and consumers are brutal, so they're going to lose some businesses. So they put $1 million in each of them, that goes all down to zero. They have a few, 3, 4 maybe, that are able to continue growing, continue scaling, maybe even some return the value of the investment. They go from 1 million to 3 million or whatever it is, and they're counting on one. They're counting on 1 or 2 to go 10 or 100 or 1,000x. And that one has to not only provide its value, it has to provide the value that the other 3 that survived didn't provide, and it has to make up for all the losses of the other ones, because it has to make up for the loss before it can give return. So now when you think about that math, it's obviously VCs are great because they've got all the money, and every early stage startup founder can get frustrated with VCs because it's like, man, I wish you guys would give us money. How can you do this? Like, we're trying to build. But you can also understand, imagine you have a $100 million fund, you have to put some money to work, and your startup that you're showing them only can grow to $20 million. They're like, I can't make an investment that only is going to get that big. I can't literally, from my investment mandate, it's not going to work because the math doesn't work. So thinking about the context of what type of scale your solution offers in terms of how big can it get really can help you frame how you talk to the VC, how you approach them in the room, because you know what they're thinking. You know how they're framing the problem in their head. Let's dig in to sizing the market. So when I think about the market, start accurate, which means don't start by saying 1 billion. Start by focusing on really being specific who you're trying to serve. And you can do this a whole bunch of different ways. If your problem has a very specific audience, like let's say you make something for type 2 diabetes, right? Perfect example. You have a very fixed audience. You have people that have type 2 diabetes, and you have people that are connected to or work with people that have type 2 diabetes. You have the direct and the immediately, tangential, right off to the side, more of a supply chain thing than a different customer. Now, within that, an 18-year-old who's got type 2 is very different than an 87-year-old who's got type 2. So even if you were to focus there, the question is, who are your first buyers? Who's the critical need? Who are the places, where are the places where you're going to really kind of make a stand as much as you can and get the most amount of traction to validate? The way that I like to think about it, and the kind of the phrase that I'd use to kind of, I think, frame it properly, is you can't target everyone, but you can target everyone specifically. Meaning if my solution has 10 offerings, not all 10 are going to be relevant to every person. But if I take like steps 1 and 3 and 5 and package that in an ad, that's good for 18 to 24-year-olds. And if I take 2 and 5 and 7, that's going to be more relevant towards 47 to 54-year-olds. These are illustrative examples, but you can see that the base doesn't change. The framing can. And what that means is you're thinking about the needs of each customer and how they relate to the product, how they relate to the service, how they relate to their need the best. And you want to make sure, you're listening to them, because if you listen to them, they'll tell you exactly what they want, how much they're going to pay, what their interests are, what their focus are. It's funny. If you get into this sizing the market, you start to have a lot of fun because your customer is telling you how to sell them if you do this right, because you do the research to figure out which are the customers that need this the most. So the way that I like to start it is start by basic. Start by figuring out your base case, and then figure out, as an example, you're a US-based company, you target people with type 2 diabetes. As a rough draft, I'm going to assume everybody that has if it would work, if my solution would work with everybody with type 2, then everybody that has type 2 in the US is going in my TAM. From there, there's a question of, well, maybe there's places, geographies, areas, age groups, whatever it might be, Now, serviceable available market is generally meant to be more geographic, but in the age of COVID, geography is a little bit less relevant because we can obviously go digital and we have Discord and can do things like this. But what it means is you can be more specific. So maybe everyone with type 2 is relevant, but maybe the real area that you're going to get 90% of the value, at least in the first, 6, 12, 18 months, whatever it might be, are the 18 to 30-year-olds. So maybe that's the area that you put for your SAM. And then you live in Charlotte, you live in Miami, you live in Arizona, you're traveling to wherever, it doesn't really matter. What are the areas you can access? What are the areas where you could, if you had an investor, if your uncle gave you $100,000, you can go say, oh yeah, there's 50,000 people in this area that I can access in my local geography or neighboring cities or neighboring, in the state. That's kind of how I think about it. Basically, if you're in a state, that state's yours. So at a minimum, look at that scale. There should be probably clients there, and there's a place where you can start to show and prove out that there's demand. Now, the 3 ways that I typically recommend doing this research are at the bottom. So the first is obviously online market research. You got to know the facts. You got to know the stats. You got to know the industry growth. You got to know what the market forecast is looking like. You got to know if there's a lot of competition, because the worst case scenario would be you walk into an investor meeting and they say a name that you don't know. And that person happens to do what you do, or that person happens to be a direct competitor that you could have found on Crunchbase, or somebody that, is offering to a similar, or the worst is one of their portfolio companies that either does what they do, that does what you do, or is so similar that it's probably something you should have mentioned, right? That's part of the whole diligence question. But doing that market research to figure out who is actually out there in the space and what are the questions that can come up and who are the people you need to kind of know generally about, direct and indirect. It's important to, start there as a good baseline. Digital marketing is obviously great. Digital marketing can be everything from posting on Facebook and getting likes, creating a group, creating a website, creating a blog, running ads, posting on Instagram. What it is, it's basically, I call this kind of the caring portion. And what that means is, what's the minimum level of effort that somebody will do today? They will hit like on an Instagram post, right? So show that if you offer a fintech solution for Latinos, I want to see 1,000 people liking every post. I want to see that people want this. I want to see excitement that you're offering something of value. And it's one of those kind of classic things of there's no right or wrong answer as to what validation looks like. And we'll talk about that more both in this session and plenty of others. But there's a critical pace of you need to show that somebody cares besides you. And the best people to show that care are strangers. Because strangers don't owe you anything. Strangers don't want anything. Strangers just look at something and go, do I like it? And that's powerful. And then, of course, the best, both because of education and because the more customers you talk to, the better off you're going to be, you can get some leads. You can go talk to a bunch of 18 to 34-year-olds that have type 2 diabetes. You can go to networking groups. You can find out where, these types of people exist and go sit there awkwardly. It sounds so silly, but it's something as similar as if you're in the room, eventually someone may bump into you and then you say, excuse me, and then all of a sudden you're in the middle of a customer interview. There's a lot that can be done. Business model breakdown. So when you're thinking about your business, right, it's important not just realize what you're doing, but how you're going to make money from it. And I'll give you kind of an illustrative example. It's very popular these days to have nonprofits create, either sell goods, of course, which we've seen, but have for-profit arms that they own. Now, why would they do this? It's because it really, really sucks asking people for money. It's way better if you have a mission and a way to support it that the community can through donations, but also that you provide a value. And if you provide a value, you don't have to ask for money. You can just continue to live out your mission and deliver the value that your nonprofit seeks to do. The same thing is true in the world of finance and startups. I used the Google example earlier, but you can imagine if Google would have picked commission model, if Google would have picked affiliate model to start with, these would have been the wrong ways to engage. This would have made the customer experience awkward. And it could have if there was just one other search engine out there that was a little bit different. And if the whole Wall Street bets and everything under the sun, everybody on Discord and all these different channels has shown us anything, is that only a few people can cause quite a commotion. and they can do quite a bit of work. And that's on a national scale with stocks. You can imagine what it can do to a little company that's just starting to grow. So there's not to say that you have to pick one way and that's the way. You can have 8 different ways that you monetize over time. But what you want to do is you don't want to make your job any harder than you need to, and you want to monetize in a way that people are the least likely to resist. Means if you can get away with giving it to them for free and charging on the back end near term, it's a great thing to do. If you can get away with charging them very first thing, even if it's only $1, that dollar really means something, because it's not $1, it's an indication of interest. And yes, it would be great if it was 1,000 of those, but you're still with one. Now go get one more and one more and one more, etc. So when you look at your business model, it's really a question of think about, as you're building this offering and as you're thinking about your product and your service, what is the easiest way to get money, to get value? Not even that everybody wants to be hundreds of millionaires and billionaires and blah, 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 but you don't want the way that you make money and support the business to be inconvenient to your end consumer. That's not the goal of you making a business, right? So spend some time, think about it, and figure out which is going to be the best model that allows you to engage without, an excessive amount of resistance. So traction. Traction we talked about a little bit. I talked about kind of the digital marketing side of it, so I won't go through that part again. The letters of intent and customer interviews is a critical area, both because, for me, I'll give you an example. My firm, Argent, we will end up in the next couple of years, right now we have a few things in the works, but we will end up raising capital and we will put it to work in early stage startups. And I know, because I talk to startups all day long, that one of my very first questions, and it's going to be before you even get in the room, is have you spoken to 10 customers? Have you sat down? And if the answer is no, then the reality is, for me, that is not a risk worth taking. Because if you haven't gotten out of the building, if you haven't assumed, I've talked to plenty of startups, and it's one of those things, I get it, because of course life comes on hold and different things. But I've talked to startups that are 3 years old, and I ask them what's going on, and they're like, oh yeah, we're almost finished planning our MVP. And I'm like, okay, well, I get it, because life happens, but have you had conversations? Have you done things? Have you proven it out? Like, there's so much you can do that requires very little time and effort if you just do it strategically. But if you do it still, they can move the needle in a meaningful way. And customer interviews are one of the most valuable, because you never know what that golden nugget is that someone's going to say that actually leads to the ultimate success. And the more you put yourself in the room to actually experience that, the better this deck, it basically writes itself if you listen properly. And then, of course, last but not least is revenue and active customers. It's important to show that you can make money. And obviously the early stages of making money are doing market research, and a little bit later from that is getting clicks, and a little bit later from that is shaking some virtual hands and meeting people, and then a little bit later from that is clipping the first dollar. So some people get there very, very quickly. They process the 5 stages of grief in a moment, and some people take a little stroll. It doesn't really matter. It's just one other question of what pace are you getting to? What pace can your business and cash, the burn rate, if you only have $1,000 a month that you can afford for the next month, 12 months, and you need to make money, say, okay, you've got a timetable. You got to raise capital or make money. So what is the plan? What is the kind of plan of attack? Competition. So competition, I'll split it left side, right side. So left side is meant to show you 2 of the most common ways, the top portion being the most common recently, ways of showing the competition of your startup. And the reason that I like to show this is because there's 100 ways to show your competition, but what I like to do is make sure that regardless of the visual, I understand the logic, right? Because rules can be bent and broken. I love the Matrix. You can bend and break rules, but you kind of have to know them first and really understand them. So when you're looking at the top one, right, 2 common methods for competition overview. Feature A, feature B. What's the goal of this? This says we offer more than they do, or we offer different than they do, or we offer all the things that X customer would want and nobody can compete. They're missing it, they're not focused on it, they're not doing it right. We offer, critical features that they're missing, but it's very much a feature. It is a comparison. It is a look at what we do and what we do and what they do. And of course, the natural question of that is, how deep are those competitive moats? Meaning, if you're offering differences, we offer debit cards. It's like, well, a lot of fintech platforms offer debit cards. So if they offer it as well, does that remove that check? And if it does, that's a problem. Or it could be a problem. So you have to have an answer, because the answer could be, yes, it does, but they're not in our markets. So we're already exposed. We're here, that, and there. And the way it works out, it's this, that, and the other. There are great ways to explain it. And, to be fair, even little bits of bait that you can leave to have interesting conversations. But it's important to understand the framing that you're going in for. Bottom left, I think it's pretty simple. Accessible and inaccessible are easy ones that are often used, as well as affordable and expensive. But basically, us in the top right, we're the best, we're the easiest to get to, the best price, the best value, all that good stuff. And of course, you want people to the left, to the bottom, or to, underneath to show that they're more expensive, more inaccessible, less friendly, whatever it might be. On the right side, competitive advantages are one of those. They're specifically, like most things, unique to every single startup. And it's all a question of framing more than anything else, because as I'm sure we've all seen, there are people that walk on stage that have resumes, the length that you've never even seen. You're like, okay, there's no way this person did what they said they did, because I have never heard of them once in my life. And in reality, they were like a junior engineer like 35 years ago at Panasonic, and they claimed that they were very senior, right? So framing can go a long way. So what's important to understand is at least what are the kind of critical questions, meaning founder. When you're looking at a competitive advantage, it's what can't somebody copy? What's the cheat? What's the hack? What's the reason that you have an advantage that money can't buy, right? Or at least a lot of money can't buy. So founders, this is a classic. If you're creating some nanotech, fintech, healthcare, bot, transportation, whatever it is, that's very niche and very specialized, I love it. Fantastic. Make sure you've got somebody on the team, and hopefully you've got somebody on the team that's 1 in 100 people that's especially focused, knowledgeable, creative, has a track record of success, whatever it might be in that area. The market, mind you, this is the weakest competitive advantage, because of course it's always great to ride a big wave, but again, you're on a wave, and waves unfortunately, crest. So that's one thing to be always mindful of. The product, is the product 10 times better or 100 times better? And big thing to remember here, better doesn't mean beautiful. And I'll give you an example. Nobody here likes the way Craigslist looks. Nobody here likes the way Reddit looks. I mean, nobody here likes the way Facebook looks, probably. But clearly the aesthetic doesn't really bug us that much. Clearly it's about the value. It's about the speed. It's about the access. It's about the connection. So what that means is your product delivering a value that is, Reddit people would die for Reddit, right? They love it. It's their community. It's where they post their art. It's where they spend their day. That is an experience that is 100, 1,000 times X what they could have initially promised. That's a great competitive advantage. Acquisition, are you able to get customers for free? I'll give you an example. If you do something that a bunch of communities are supposed to encourage, right? You're encouraging financial performance for, minorities. If you have an application that does something for that, go to those people. And if there's a good alignment, if there's a way to incentivize, that's a great way to get easy momentum, right? If everyone is starting to use search and you offer search, and that means that everybody naturally is going to start coming to you, that's a great thing to do when you have a natural funnel, right? And then a monopoly. There's a great TED Talk, and I forget who gave it. His name's escaping me right now, but his point was, every monopoly says they're not a monopoly, and everybody who doesn't have a monopoly says they have a monopoly. They say, we have a stranglehold on the competition and nobody can stand us. And Google and Facebook and Microsoft get up there and they go, oh, it's so hard. Everyone's against us. The world's closing in. I can't believe it, because they know they're monopolies and they can do whatever they want. And obviously the government doesn't take too kindly to that. But having monopoly-like characteristics, meaning the bigger you get, the harder it is to kill, or the bigger you get, the cheaper your prices, or the bigger you get, the more accessible and more partnerships. For example, it costs money to, for example, get licenses in international markets to offer healthcare or financial or real estate products. But if you grow to a significant scale in the US with a real estate platform, and then you go to London, which is obviously a mature market, first world nation and very developed, and you succeed there, then you can obviously, your scale can very much increase, but you obviously have to hit a certain scale to allow for you to expand, to allow for you to take dominant share and do these different types of things. Your go-to-market strategy. So this is, how can I get people to use my thing, whatever it is? And this is kind of my workflow. So first and foremost, where are my customers? Am I one of my customers? Do I know them? Do they have a Facebook group? Do they have a LinkedIn? Do they meet at the park? You know what I mean? Do they go to a specific community or geography? But how do I characterize them? Almost like that show Criminal Minds, where they do like all the profiling and stuff. It's kind of there. You want to think about it from every angle. They do the demographic, the psychographic, and every other fancy college word under the sun. But basically, understand them inside and out as much as you can, because remember, the goal of your startup is not to deliver a solution. The goal of your product is to help an end user. And if you're flexible and you listen to them and you find them and you actually care and look inward in terms of what do they really want, your solution will be very clear. It might be difficult. It might be hard. You might need licenses. You might need, a lot of capital. But the clarity and the knowledge of what you actually need to do is all that you really need. Because trust me when I say, there's infinite money, like infinite money out there. When I was in investment banking, if we didn't see funds that had hundreds of millions to start with, we wouldn't even think about them, right? And think about that. That means that there are loser funds with hundreds of millions of dollars, which means there's basically infinite money out there. It's just a question of where does it reside? How can you access it? What's the most efficient way to get it, et cetera. In the same way, your customers are out there. Locate them, figure out the best method of engaging them. Could be everything from cold calls, social media, could be posting on Discord, could be living in a Reddit channel. It doesn't really matter as long as it's the genuine way for you to connect, learn, appreciate, grow. And then, of course, closing and servicing. How are you going to close? How are you going to service? Because the life cycle of a customer doesn't end there. In fact, the most important part of a customer is after they pay you and after you service, because they're either going to add to your business by telling people they had a good experience and recommending you, or they're going to close your business by saying, yeah, I paid, but I wouldn't pay again. That's a problem. So these are ways to consider the beginning, middle, and of course not end, but late stage life cycle of a customer. Team's pretty simple. One, are you checking all the big boxes and literally just Google standard, business roles, CEO, CFO, CLO, or, general counsel, COO, et cetera, and go, okay, understanding I'm a startup and of course I can't solve every problem because, I'm holding myself together with duct tape. What can I do to actually show that my team is, the 3 C's, if you're, special, is qualified, competent, and committed. So do people actually have degrees or knowledge or anything that can really show that they're the person to do it? This is kind of that 1 in 100 founders. Are they competent? Meaning, do they actually have a track record of success? And have they shown, if they're a crypto person, they better, 1, own some crypto, and 2, they better have some things and some projects and some different areas that they cover, because that's going to show that they're competent and engaged and active in the space. And then committed. And committed is critical because, of course, everybody would love to have a business person and have a dedicated tech person and have a dedicated finance person and everything else. But that's not always on the table, and nor does everybody want to start doling out 20% equity to everybody that comes a knocking. So sometimes getting an advisor, sometimes getting a mentor, sometimes getting a quasi-interim person, which is very often, for example, where someone like us would come in. We fill that interim role because guess what? Most people don't need a full-time CFO. They need to be spending time on their customers, on their clients, building their product with their engineers, but they do need finance help. They do need business strategy help. So we basically help set the bumpers and they go through and execute. So you can imagine what we do, our application, imagine that in tech, imagine that in marketing, imagine that in, any sort of advisory position, legal that falls under. These are areas that you can definitely engage. Your summary of your timeline and milestones. So this is a simple timeline page, just left to right. And these are example kind of areas and critical moments that happen in the startup's life cycle. And the way that I like to think about it is left-hand side is about what I've done. Number 3 is what I'm doing. It's my area of value. It's what I'm focused on. 4 is my near-term goal. And 5 is my future. And what that means is even if there's 7 things or 8, it doesn't matter, right? But it's a question of how are you looking at the problem? What have you done? And if you haven't done anything, what can you do? How can you get something in the done column? Where can you have a present focus? And then what are your goals for the future? What are you going to enable? Or is it that you're validating your idea still? Is it that you're trying to find some team members, advisors, mentor groups, things like the Vortex, where people like myself, Alex, and many other people in the community are eager and excited to help and support? Are you raising money? Are you hitting the 1,000 member mark and doing all these big, great things? It's a great time to celebrate. Capital ask and use of proceeds. So big things, let's start on the left-hand side. So know your capital by knowing your stage. And what I mean by that is not all capital is appropriate for every type of investor. If you're very, very early stage, unless you're working with a fund that really focuses on early stage, like pre-seed, like Hustle Fund in California, which gives you, I think, 20K or 25K. And then if you accomplish the goal that you set with them, they unlock another 200K or something. See, it's a very specialized fund. That's a fund that's founder friendly. That's a fund that actually understands the nuances of getting stuff done early stage. There are other funds that will offer you $50,000 and ask for 30% of your business. And founders that don't know, founders that don't have business experience, or founders that simply think that this is the only way they're going to get the money, they take the deal, right? And that's, of course, not what you want to do, or at least it's not what you immediately want to do. If you can knock 10% off that, you can save that money, that makes a big difference later. So knowing your stage, knowing that in the idea stage, you're probably going to need to self-fund. It could mean that you put in a little money, how close you and your friends and family are. At your seed round, you start getting into angels. Now, the distinction between seed and Series A and pre-seed, Series A has a very clear cutoff because you start issuing preferred shares. You start typically raising capital sizes in excess of 4 to 6 million. Series A raises are increasing in value because, of course, money gets bigger, supply gets bigger. You know what I mean? Just numbers get pushed bigger naturally. But I typically think about it like this. If I have a big round that's not Series A is my seed. A little round is a pre-seed. Kind of the easiest way to think about it. And then from there, as you start moving up the chain, as you start progressing, as you start looking at what I call growth capital versus goal capital is a seed raise. Goal capital is I want to get the MVP done. I want to put this in someone's hand. I want to add these 6 extra features so we can go to market, whatever. Growth capital is we need to expand our marketing team. We need to improve our development so we can offer more features to our existing customers. We need to grow. We need to see the future and see that there's scale on the horizon. Example, use of proceeds. Use of proceeds can be far and wide for every single startup, but these are general buckets that it's kind of hard to remove. You're always going to have some sort of office or rent or some sort of expense. You're generally going to have development if you're some sort of tech company, or some cost of sales, whatever it might be. You're going to have a sales team or some sort of marketing or go-to-market effort, which likely costs a few bucks. Could be everything from a CRM to $1,000 or $5,000 a month in Google paid per click. And then legal. Legal's not cheap. Startups aren't cheap, unfortunately, and there's good ways to get good legal value and understanding. But of course, lawyers have to work, and lawyers go to school and go into a lot of debt and then come out and do work for clients. So you can understand why they don't want to really drop their rates any lower than they need to, because they have to recoup some of that, and that's part of the deal. So the last point I'll say on this is this 12-month runway is critical because it's a vision, right? It's not, oh, give me 18, give me, 1.8 million. I'll let you know when I'm done. It's like, well, no, what's your goal? What's your quadrants? How are you splitting it up? What's your benchmarks? What are your KPIs? What's the runway? Is the typical phrase. Because raising money takes time. So if you have a 12-month runway, the first 6 months we're using the capital. The next 6 months we're saying what we use the capital for to raise money, so that in month 13 we have money for months 13 to 24. Right? There's a flow. There's kind of a natural ebb and flow where the things dovetail together, but this is one example. I think this is actually the last slide. So last quick slide, and then I know I'm pushing it to the end. And the nice thing is we're in Discord, so people can always feel free to send me a message or let me know if they have any questions now or later. I'm going to be hosting office hours later this week, I believe, so I'll post something later. But quick overview of financial projections, and I already have a full presentation built out on this, so one of the next sessions I'll do that as well. But financial projections, the way I like to think about it, left-hand side, make it as simple as possible and complex as necessary. Meaning you don't want to show an investor some 100-page thing just because it's a model that you have access to if you can't access it, if you can't understand it, and if they can't read it, right? They want to see a clear path to revenue, and clicking through 100 tabs usually isn't that. Have defendable assumptions. Please don't, have a SaaS business and say you have a 99% margin. Like, okay, well, SaaS business margins are anywhere from 60 to 85%, maybe. So if you're not in that range, you kind of have to know why you're not in that range. And this is where knowing the data and doing that market research is very helpful. And then, of course, last but not least, know the industry expense and revenue norms. Meaning, if you're going to tell me that your e-commerce store is going to grow to X 100 million, and I tell you that, okay, well, just so you know, Amazon and Etsy only grew at X percent, on average, and your percent's double that, you probably better either rethink that or come up with a very compelling and, mathematically, financially sound answer so that I can feel comfortable. And the nice thing is, if you can, then I get excited. So that's kind of the risk you take, right? Critical financial questions. These are things that I always think about, kind of the big questions I always ask. What's your growth profile? Are you getting people? Are you signing people? Are you talking to people? What are you doing? What are your variable and fixed expenses? Meaning, do you actually understand how much this thing costs? Do you understand what it costs to scale? Do you think of anything in terms of margins? If you have hardware, you're buying molds or doing whatever it might be. And then, of course, what is the expected capital need for supporting and expanding? Growth isn't cheap. If you've got a hardware business and you're not raising, probably a few $1,000,000, you're going to need it eventually. And if you're planning on raising a SaaS business and doing all this marketing, understanding that, $25K is not all that you're going to need to enter a market. So having realistic expectations, even if they're large, can be very, very helpful. So I know that I've been, going and going and going. So I'm going to take a pause here. If anybody has any questions, of course, I'm happy to stick around and, answer a few. But thanks very much for listening. I hope it was helpful.
That was badass. That was a lot, man.
It's very overwhelming when I do these things, but I prefer seminar because I don't know about you guys, but I hate going to all these lectures and all these LinkedIn things, and they spend 30 minutes pitching themselves and 20 minutes talking about 3 different topics, and then it's just over. It's like, no, I want to get in and know 100 things and go, wow, this is great. Now let me go get to work for a week.
Yeah, that was one of the most densely packed bits of information I think I've seen presentation. That was a lot, but it wasn't filler,
No, absolutely. Yeah. And of course, if anybody has questions, feel free to speak out or send me a private message, whatever works. And for me, what my intention is to do, and of course, if people in the chat right now or people that will attend events in the future, I intend on hosting a bunch of events like this, basically once a month to start. But I want to show you guys, the nice thing is my world and what Alex and I do is we work with accelerators, with founders, with mentors. For us, we obviously work and a lot of startups are our clients, but it's also an area that we feel very passionate about. So it's an area that we want to continue to give a lot of good value and host really detailed, full presentations like this. We're going to do a deep dive on a financial model. We're going to talk about what it actually means to pitch, in terms of how you speak and the things that you should say. We're gonna go through it all, so it'll be a good process, and we'll answer questions along the way. But thank you everybody for attending.
Thank you.
Thanks for presenting. Wow.
Good stuff.
Aaron, I have a question.
Get ready for that financial model presentation. It's going to be fun.
That's the goal. So it's a fun one. So cool. If anybody has any questions, feel free to reach out. Alex and I are around. We'll stick around on Discord for a while, I imagine. So feel free to send me a private message. Thanks, everybody.
Hey guys, thanks for listening to that talk. I hope you got a lot out of it and it was as valuable for you as it was for me when I first heard it. This was just last week, February 3rd. Yes, February 3rd. So we have stuff like this going on every week. We have more content being created by some incredible business leaders and smart guys. So if you are interested in learning and improving your own situation in business, stop in at paradigm.cx/thevortex and just start getting involved with this networking group. And it's really more of a community, a safe place for business founders to learn and share ideas and resources without feeling like their ideas are going to be taken from them. So it's a collaborative environment. We operate on the community partnership, and the idea is to give value first. So you give value into the community via interacting with people, commenting, helping to solve a problem, contributing your neurons to the pool we have going on here, the collective, and in turn you get the benefit of getting extra neurons firing on your problems and helping you out with solutions that you otherwise would have been hard pressed to find on your own. So you don't know what you don't know, and this is one way to expand your horizons and increase the base of knowledge that you have. So check it out, guys. I highly recommend stopping in and at least checking out what we have to offer. Thanks for watching, and I hope you have a good day.